Warm greetings to everyone tuning into Finantax Clips. Today, we embark on a riveting journey of financial transformation, unraveling how a humble $100 blossomed into a staggering 10,000. It's a tale of sharp wit, strategic maneuvers, and the sheer power of smart investment strategies. And it's not just about the numbers, it's about the lessons learned, the wisdom gained, and the growth experienced. So buckle up and prepare to delve into this intriguing world of finance. Stay tuned as we unravel the story of this successful financial journey. So, where did it all begin? With a mere $100, that's where. This journey didn't start with a hefty bank account or a significant inheritance. No, it started with just a modest $100. You might be thinking, what can you do with $100? Well, you'd be surprised. The key was not in the amount, but in the mindset. This was not just $100, it was a seed, a starting point, a symbol of potential and possibilities. It was a commitment to embark on a financial journey, a willingness to learn, and an acceptance of potential losses. Starting with a small amount doesn't mean thinking small. It means understanding that big things often have small beginnings. It's about being willing to take calculated risks, to step out of the comfort zone, and to embrace the idea that success is not always immediate. This initial investment was a testament to a belief in the power of compounding, of patience, and of persistence. It was about the willingness to stay in the game, to learn from mistakes, and to continually adapt and evolve. It wasn't just about making a quick buck. It was about learning the ropes, understanding the market dynamics, and building a solid foundation for future investments. It was about developing the skills, the knowledge, and the confidence to make informed decisions and to seize opportunities when they arise. This journey was not just about the destination, but also about the journey itself. It was about the thrill of the chase, the satisfaction of making smart decisions, and the joy of seeing small investments grow over time. So even though the initial investment was just $100, it represented so much more. It was the beginning of a journey, a commitment to financial independence, and a testament to the power of smart investing. Remember, every financial journey starts somewhere, and this one started with just $100. Now, having $100 is one thing, making it work for you is another. Our journey starts with the first steps, the early strategies that laid the cornerstone for our financial growth. Just like a chess player contemplates his opening move, we too had to strategize. The financial world offered a myriad of options, from stocks to bonds to mutual funds. But how did we choose? Well, the answer lies in the power of research and understanding of the market. You see, the financial market can be a labyrinth, but with the right knowledge, it transforms into a treasure map. We dove deep into the world of finance, learning about the different types of investments, their inherent risks, and potential returns. We started with stocks, the shares of companies traded publicly on the stock exchange. The key here was to look for companies with strong fundamentals and promising growth prospects. We didn't chase the hottest stocks. Instead, we looked for value, for stocks that were undervalued but had the potential to grow. Next came bonds, the safer cousin of stocks. These are essentially loans you give to governments or corporations in exchange for regular interest payments. While the returns may not be as high as stocks, they offered stability and a steady income stream, balancing out the riskier stock investments. We also dipped our toes into mutual funds, a potpourri of various investments managed by professionals. This allowed us to diversify, spreading our $100 across different sectors and reducing the risk of putting all our eggs in one basket. But these investments were not random shots in the dark. They were backed by diligent research, understanding market trends, and a keen eye on global events that could impact these investments. We learned to read financial statements, understand economic indicators, and analyze market data. The key here was not just investing, but investing wisely. It was about making informed decisions, not being swayed by market hysteria, and above all, being patient. These early strategies were not about quick returns, they were about laying a solid foundation for long-term wealth creation. The key here was not just investing, but investing wisely. Of course, the journey wasn't all smooth sailing. Now let's take a moment to focus on a crucial yet often overlooked aspect of investment: making mistakes. Yes, you heard that right. Mistakes. Those pesky little missteps that we often dread. But let me tell you, in the world of investment, they're not just unavoidable, they're necessary. You see, every mistake I made on my path from $100 to $10,000 was a lesson in disguise. Each one was a signal, a beacon of sorts, showing me where not to tread again. Sure, it wasn't pleasant when I bought high and sold low, or when I put all my eggs in one basket and that basket turned out to be full of holes. But each of those moments, as painful as they were, served a purpose. They taught me to always do my research before jumping into an investment. They made me realize that diversification isn't just a buzzword, it's a lifeline. They showed me that patience isn't a virtue, it's a necessity. And most importantly, they instilled in me a sense of humility, a reminder that in this game, no one, no matter how experienced or savvy, is immune to failure. But here's the thing about mistakes. They're only truly harmful if you don't learn from them. Every time I stumbled, I picked myself up, dusted myself off, and got back in the game armed with a new piece of knowledge, a new insight. And slowly but surely, those insights added up. They became my guide, my roadmap, leading me further and further towards my goal. In essence, my mistakes weren't setbacks, they were stepping stones. Each one was a building block, a piece of the puzzle that eventually formed the picture of my success. So don't fear mistakes, embrace them, learn from them, and most importantly, turn them into opportunities for growth. Mistakes are stepping stones to success, and in this journey they were crucial turning points. Remember, the path to success isn't always a straight line, but with every mistake made, you're one step closer to your goal. As the investment grew, so did the strategies. This approach was essential in turning a modest starting sum into a more impressive figure. One of the key tactics was diversification, spreading the investment across different areas like real estate, cryptocurrencies, and traditional stock markets. This was not just about chasing the highest returns, but rather, it was about creating a balanced portfolio that could withstand market fluctuations and provide consistent growth. Now let's delve a bit deeper into diversification. Think of it as a safety net. If one part of your investment, say a particular stock, takes a hit, you won't lose everything because your money is spread across multiple areas. It's the financial equivalent of not putting all your eggs in one basket. This strategy helps to mitigate risks and increase the potential for higher returns in the long term. For instance, the initial $100 was not just left in one place. It was divided into different investment areas. Some went into real estate, a traditionally stable investment with potential for steady returns. Other portions were put into cryptocurrencies, a more volatile but potentially high-return investment. The rest was spread across various stocks, each with their own levels of risk and return potential. Now you might be wondering, why not just put everything into the highest-yielding investment? Well, high returns often come with high risks. Imagine a scenario where all your money is in one high-risk investment, and it takes a downturn. You could lose a significant portion, if not all, of your investment. But with diversification, the losses in one area could be offset by gains in another, helping to maintain overall portfolio health. Moreover, diversification is not just about different types of investments. It's also about investing in different sectors, industries, and even geographical areas. This broadens your exposure and further reduces the risk of substantial losses. In conclusion, diversification was not just an approach, but a critical strategy in growing the initial investment. It was a safety net, a balance, and a way to explore the vast opportunities in the investment world. Diversification was the key to turning hundreds into thousands. However, the secret ingredient to this success was something else entirely. It wasn't the initial investment, the early strategies, the mistakes and learning, or even the diversification and expansion. It was something far more subtle yet crucial, the twin forces of patience and persistence. These two qualities often go unnoticed, yet they are essential in the world of investment. Patience, the ability to wait for your investments to grow, to weather the storm of market fluctuations, and to resist the urge to pull out at the first sign of trouble. It's not about mere waiting, but waiting wisely. It's about understanding that the greatest trees take the longest to grow, and the same principle applies to investments. Then we have persistence, the determination to stick to your investment plan even when things get tough. It's about the grit to keep going, to stay the course, even when the market seems to be against you. It's about the conviction that your strategy, your research, your understanding of the market is sound. It's about not giving up, not being swayed by the short-term ups and downs, but keeping your eyes firmly on the long-term prize. In my journey from $100 to $10,000, patience allowed me to sit back and let my investments do their work. It gave them the time they needed to mature and grow. Persistence, on the other hand, kept me on the path, kept me focused, and helped me navigate through the rough patches. These qualities aren't flashy, they don't make headlines, but they are the silent workhorses that drive success in the world of investing. They are the unseen forces that turn small seeds into mighty oaks, that transform modest beginnings into impressive fortunes. So yes, the secret ingredient to this success was something else entirely. It was neither the strategies nor the diversification. It was patience and persistence. These were the silent heroes of this financial journey. And so, from a humble $100, we arrived at a staggering $10,000. The journey to this point has been nothing short of a roller coaster ride. It's been marked by ups and downs, victories and failures, calculated risks, and a whole lot of patience. We began with a modest $100. Remember how we plunged into the world of investing, not with a bang, but with a whisper? We started small, focusing on safe, low-risk investments that would provide a steady, albeit slow, return. The early strategies were all about learning the ropes and getting our feet wet. As we grew more confident and our understanding deepened, we started diversifying our portfolio. We ventured into different sectors, exploring various investment options. We spread our risks, ensuring we weren't putting all our eggs in one basket. However, the journey was not always smooth. There were times when we stumbled, made mistakes, and faced losses, but each stumble was a lesson learned. Every mistake was an opportunity to grow and become better. We adapted to the changing market scenarios, fine-tuned our strategies, and stayed resilient in the face of challenges. Patience was our best friend on this journey. We understood that the world of investing is not a sprint, but a marathon. We didn't let the slow pace deter us. Instead, we persisted, held on to our investments, and waited for the right time to reap the rewards. And here we are, standing tall at $10,000. This is not just a number, it is a testament to our journey, our learning, our resilience, and our patience. It is a symbol of our growth as investors. The journey to $10,000 was not a straightforward path. It was a winding road filled with sharp turns and steep climbs, but we navigated it with determination and a spirit of learning. And that's how a simple $100 turned into a whopping $10,000. So, what can we take away from this financial journey? Reflecting on our journey from $100 to $10,000, we've navigated the financial seas with a compass of smart investment strategies. In the vast ocean of investment opportunities, we've learned that it's not about reaching for the biggest fish, but about making informed and calculated decisions. Our initial investment might have been a mere $100, but it was the springboard that launched us into the financial game. The value of $100 might seem trivial, but when leveraged with knowledge and strategy, it becomes a powerful tool. The first steps were all about understanding the market and learning to read its waves. Mistakes were made along the way, sure. But the true essence of a successful investment journey lies not in avoiding mistakes, but in learning from them. Each misstep was a lesson, each failure a stepping stone towards success. It was through these mistakes that we honed our investment strategies and fine-tuned our approach. Diversification was our safety net. Spreading our investments across different asset classes allowed us to mitigate risk and harness the power of various markets. The key was not to put all our eggs in one basket, but to distribute them wisely across multiple baskets. Diversification was our hedge against market volatility and our ticket to sustainable growth. Patience and persistence, our constant companions on this journey, were the fuel that propelled us forward. The world of investment is not a sprint, but a marathon. It's about playing the long game, staying the course, and riding out the storms. It's about understanding that Rome wasn't built in a day, and neither is a solid investment portfolio. The journey to $10,000 was not a smooth ride. It was a roller coaster of highs and lows, wins and losses. But with the right strategies, learning from our mistakes, diversification, and a whole lot of patience, we turned $100 into $10,000. In conclusion, the journey from $100 to $10,000 is not a straight path. It's a winding road filled with challenges and opportunities, risks and rewards. But with the right strategies and mindset, anyone can embark on this journey and come out victorious. Thank you for joining us on this journey at Finantax Clips. Don't forget to subscribe for more insightful content like this. Until next time, keep investing and keep growing.